Okay, all right, Rima. Thanks so much for that. But let's focus on the other mid-cap IT stock, that's Mphasis. That's the stock on our radar. After the company acquired Stelligent Systems LLC in an all-cash deal that's valued at around $25 million or about 175 crores. Mr. Nitin Rakesh, the CEO and Executive Director of the company, joins us on the phone line. Hi, Nitin. Thanks so much for joining in. Give us a few details about this company that you're acquiring, Stelligent. What exactly is the revenues? How do you see it scaling up? And what's the margin profile of this company?
Sure. Thanks for that. Thanks for having me on the call. I think this is something. This is a company that is very strategic to our overall, roadmap of focusing on what we are calling the cloud native and cognitive first approach. Given that AWS, which is the premier largest market share provider of public cloud, is actually still a fast-growing market, this company actually brings to us specific capabilities in cloud-based DevOps, containerization, and automation capabilities, and will actually fit very nicely with our overall approach, as I mentioned, whether it is for applying the whole front-to-back digital transformation or even more importantly, for using the container approach for legacy modernization of core applications that almost every large enterprise client is in need for. I think overall the company has about 50 plus engineers, just under 1% of our revenue. And it's a hyper-growth company. It's been growing fairly well, 20 plus percent, especially the last 3 years that we've looked at it. They were acquired earlier by another company called Hosting, and we've actually divested them out of that company as we speak. So something very strategic. We're very excited about taking this capability to our clients. It's a small tuck-in for us in terms of capability purchase, and again, as I said, it kind of fits very well with our overall strategic approach.
Hi Nitin, good afternoon and season's greetings to you. Just to get some numbers, you said the revenues of Stelligent are just under 1% of Mphasis overall revenues, right? And it has been growing at over 20% for the last 3 years?
Yes.
Okay. What were the margins and what is the opportunity that you're trying to tap with this?
See, again, this is such a small purchase in terms of revenue and margin. It's actually fairly immaterial to our overall numbers. So the way to think about this is more, how can we take this capability, embed it in our overall service offering mix, and essentially take it to our enterprise clients, as well as, of course, they have some very nice marquee clients of theirs as well, and how can we kind of cross-sell into those. So I think this is more a capability synergy purchase. We don't expect any dilution or major accretion to our margin or EPS because, again, as I said, the business is actually fairly, from a size perspective, not very material.
All right. So it's, since it's such a small acquisition, let's focus on the other aspects of business. Nitin, if you could tell us, the digital risk, the last quarter wasn't a very, very great one in terms of revenues. Give us an outlook. How is it looking for the remaining quarters, second half of this year? Are things shaping up well there?
Yeah, I think, again, we talked about it extensively after our second quarter numbers. Keep in mind, we did call out for structural weakness in that market, given the interest rate environment in the U.S. continues to be fairly headwinded. So I don't think we should look at digital risk to become a growth market, a growth and driver suddenly in a quarter or two. I think our approach of stabilizing the top line, we talked about a $28 to $30 million revenue range, while continuing to find ways to keep their margins healthy, is the one that we've been working on for the last 6 quarters, and we'll continue to focus on that as well. However, I think the overall business momentum seems fairly stable. We had our best quarter in terms of deal wins in Q2, with $210 million of net new TCV in our direct business. Is the highest we've ever sold. We only report new TCV wins, unlike a lot of our peers that actually club renewals in it. So I think the trend is pretty clear for us. We are in FY18 we sold 50% more TCV, 55% more TCV than 17, and in FY19 so far, YTD we are 50% above 18. So I think it's a very healthy clip of deal wins that gives us a lot of confidence in our ability to convert those and continue to find growth.
Can you sustain $200 million plus of deal wins quarter after quarter? And we understand the deal tenure has gone up. If you could throw some light on that.
Yeah, I think, again, Rima, we have 2 primary motions as I talked about, right? The first one is the ability to take what we used to call core or traditional IT and bundle it using some form of IP and automation into 2-3 year deals is actually playing out well. So that from that perspective, not only has the tenure become healthy, it gives us obviously revenue visibility and an order book to carry into the next year. But more importantly, that starts taking the deal sizes in a fairly healthy zone. So I think that's the good news. Now, can we sustain this? I think the pipeline is fairly healthy. And we've been saying that for a few quarters, and that's starting, as I said, that is showing up, sequentially in our deal wins. Not every quarter will be a blowout quarter, but I think the overall pipeline stays healthy, and we are fairly optimistic that we'll continue to see good wins going forward as well.
Okay, Nitin, just one final question. Do you think the regulatory risks pertaining to visas in the US have gone up because the Trump administration has reportedly rolled out stringent, provisions to the H-1B application process, where now you have to disclose a lot of detailed information about the foreign employees? Do you think the regulatory environment is getting a little more adverse?
I think this is nothing we haven't dealt with before. It's been a few years since we started to see the tightening of what we call the procedural or the operational flow of on the immigration side. So I think we just have to learn to live with the environment being, I would say, fairly stringent, if not harsh, when it comes to disclosures and procedures. But I think for companies who run their operations well, who have a well-diversified workforce, and have a supply chain that actually goes beyond just H-1Bs, I think this is what we call part and parcel of our business, and we just have to work around it.
Okay, Nitin, we'll leave it at that. Thank you very much for joining in. So that's Mphasis about the strategic tuck-in acquisition, Stelligent, that they did. It's more a capability acquisition. It's a small one, but the company will look to cross-sell the capabilities of Stelligent into their existing clients. Stock is down about 1%. The rest of IT companies too are under pressure. We'll slip into a very short break. We'll come back and get in Ashwini Gujral and Prakash Gab.